There is a very specific moment that ends most mortgage broker careers. It happens somewhere around month 8. You've passed your CMAP, you've landed your first role, you've been on the desk for probably about half a year at this point, you've written some deals, you've started to feel like you know what you're kind of doing to some degree, and at the same time you're earning less than you were in the job you left, your bank balance is going the wrong way, and you've had a conversation with your partner about honestly whether this was the right move for you to do. Now that's the moment, not the exam room, not the day one start like jitters and nerves, not in some dramatic blow up with some client. Month 8 at the kitchen table looking at your bank statement. That's where the graveyard starts to fill up. Real careers that would have paid 6 figures by year 3 for most of these people, quietly end in that conversation. What I want you to understand by the end of this video is exactly why that moment is so dangerous, exactly when it's coming for you, and exactly what to do when it arrives. Because if you can survive month 8, you can survive year 1. And if you survive year 1, the rest of the career, honestly, it compounds for 30 years plus. So over the next kind of few minutes of this video, I'm going to walk you through what year 1 will actually look like. Week 1, the first 90 days, the path to competent advisor status, the lender criteria wall, the income gap, and the specific month 8 moment that decides everything else. 2 ideas to lock into your head though before we start is year 1 isn't a performance year, it's an apprenticeship year, and month 8 is where most careers die. Not because the job is too hard, but because the gap between effort and reward is just too loud. So those 2 ideas are the spine of this entire video. Let's jump into it. Nobody warns you about what you're going to walk into on day 1 with your CMAP certificate in your inbox and an outfit that you've ironed probably 2 or 3 times and a quiet expectation that you're about to start doing the job. But you won't. That's where the first small disappointment hits. Week 1 is admin, laptop setup, CRM logins, compliance paperwork, induction sessions on systems you've never used before. You'll listen to a couple of calls. You might sit in on a fact find or 2. You'll skim the compliance manual. You'll not advise a single client. Most new brokers respond to week 1 with quiet panic. Am I being useful? Should I be doing more? Why aren't they letting me on the phones yet? The good ones realize pretty quickly that week 1 is the only week of your entire career where you're allowed to just kind of sit and absorb everything. So use it. Listen harder than you've ever listened. Take notes that you'll throw away in 3 months. Soak up the place. The brokers who handled week 1 calmly are the ones who are still standing in month 9. Now, the first 90 days of your broker career isn't about earning. It's all about reaching competent advisor status in good shape. 3 things are going to be happening here all at once. You're learning lender criteria through repetition. Your CMAP taught you the theory of mortgage advice, yes, but CMAP did not teach you which lender takes which type of income, which one hates self-employed, which one is fast on new builds, which one drags its feet on the flats above shops. None of those things are in the textbook. It's in the heads of the senior brokers around you, and the only way to learn it is to be in those cases. You're building muscle memory on the advice process. Fact finds, recommendations, suitability letters, protection conversations. The first 10 cases feel like you're inventing each one of them from scratch. But by case 20, the structure will start to flow. By case 30, honestly, it's going to be second nature. Now, you're working towards CAS as well. Most firms certify you once you've demonstrated competency across about 10 to 12 cases, all signed off as compliant. Most new brokers reach CAS between month 3 to month 6. But the honest target for your first 90 days isn't a sales number. It's not a personal best month. It's reaching CAS in good shape, ideally. That's the milestone that unlocks everything else that you have. The brokers who chase income before CAS are the brokers whose cases get pulled apart in compliance reviews. And the brokers who chase CAS get the income afterwards, faster and with their files being airtight. Now let me tell you about the bit that quietly breaks confidence in month 2 to month 5, because almost nobody warns you about this. You will hit a wall on lender criteria. You'll feel like every case is a different lender. Every lender has different rules, and every rule has exceptions, and you cannot possibly keep it all in your head. You'll watch a senior broker throw a case at a lender without even thinking, and you'll wonder if you're ever going to get there yourself, but you will. Honestly, you will, but not probably in the way you think. Senior brokers don't have it all memorized. They don't even have to try, to be honest. They've got a few core lenders they know immediately, a wider group they reasonably know well, and a network of BDMs, packages, and referrers and reference points for everyone else. They don't memorize the market. They build a working relationship with it. So stop trying to memorize everything, okay? Pick 5 core lenders and learn them deeply. Build relationships with their BDMs, get on their broker calls, read their criteria updates, become an expert on 5 and use sourcing systems for the rest. Specialist knowledge in 5 beats vague knowledge in 100 every single day of your career. So the brokers who try to learn everything, they learn nothing. The brokers who go deep on 5 become absolutely unstoppable at the beginning. So now we have to talk about month 8, because this is the entire reason this video exists. And because if you take nothing else from this entire video, take this. Somewhere between month 6 and month 10, almost every new broker hits this emotional wall. The job is starting to feel doable. You've reached CAS, or you're pretty close. You're writing cases and you can hear yourself getting better on the phone. From the outside, you're progressing exactly as you should be. And then you look at your bank account. If you're employed, your income is creeping up, but it's not going to be very exciting. 22, 25 grand annualized, if you look at it that way. Less than you were earning before, possibly. And your commission is climbing, but it hasn't overtaken your basic pay yet because the volume is still building. If you're self-employed, though, the picture is way worse. You might be earning very low 4-figure months, sometimes less, sometimes nothing. And some of your peers on LinkedIn are posting about their personal best months, and you're worrying about your next month's mortgage payment. That's month 8 in a nutshell, honestly. And that's where the graveyard that I talk about fills up. I talk about this graveyard all the time. Most year 1 quitters quit in this window, not because the job got harder, not because they failed at anything, because the gap between how hard they were working and what they were earning became emotionally unbearable to handle. And they convinced themselves the career was honestly the problem. But it wasn't the career, it was the gap. And the brutal truth is this: pipeline in the industry is typically going to mature about month 12 to 18. The exact point where quitters quit is the exact point where the income was just about to start to climb. They were 3 months from breakthrough, they just didn't know. And so here's what I want you to do in month 8, because this is the line that will keep you in this career. Mark it in your diary now. Month 8 is going to be hard. Month 8 is going to feel like a mistake. Month 8 is going to be the moment my brain tries to convince me to quit, and I'm going to ignore it. I'm going to keep showing up. I'm going to push through the month to month 12. If you do that, you will literally pre-decide that month 8 is a known obstacle, not a signal. You'll get past it. The people in that career graveyard, they did not pre-decide. They walked in expecting linear progress, and then they got broken when it didn't arrive. Pre-deciding month 8 is the single most valuable thing you can do in your first week. Now, let me give you the honest income picture for year 1, because the lies about this are what set people up for that month 8 experience. Employed brokers in year 1 typically are going to earn between 22 to kind of 35 grand, probably all in. Some firms can cap early commissions until you kind of reach CAS. Some pay you full whack from day 1. Either way, year 1 is not where the money is. Now, self-employed brokers in year 1, they earn widely variable amounts. Some genuinely earn under 20 grand a year because their pipeline didn't mature until month 9. Some earn 40, 50 because they had a strong starting network, but most are well under what they'll be earning by year 3, way under. And the honest version is this: year 1 is the investment year, year 2 is the catch-up year, and year 3 is the payoff year. Anyone who's watched a YouTube video about earning 6 figures in their first year and signed up to this career expecting that timeline is going to quit in that month 8. Anyone though who signed up expecting year 1 to be lean and year 3 to be life-changing is probably going to make it. Set that expectation honestly with yourself, with your partner, with anybody else who needs to know. Protect those 18 months that it takes for the income to climb. The cost of getting it wrong is your career. Now, there are a handful of avoidable mistakes that probably do most of the damage. Watch out for these. First thing is pretending to know things you don't know. Quickest way to make an expensive mistake on a case is that. Ask, always ask. Senior brokers respect the beginner who asks. They don't respect one who fumbles. Choosing the wrong firm and then blaming the industry. Sometimes I quit brokering should have actually been I changed firms. If your firm has no training, no support, no leads, you are not failing the career. The firm is failing you. Move to a new firm. Treating protection as optional is another one. New brokers shy away from it because they're not confident yet. That single avoidance halves your potential income from the entire year. Easily, could even be more. Fix your protection confidence in the first 90 days and the income compounds for the rest of your career, and it is life-changing. Comparing yourself to senior brokers is another. They've been doing this for years. You've been doing it for weeks. Of course, your numbers are going to be smaller. The comparison destroys your confidence and it tells you that you are not useful. It doesn't help you at all. Skipping the diary because you don't feel busy enough yet. Year one is where you're going to build the discipline. Brokers who block their diary from week one scale properly. Brokers who freestyle plateau forever. Now here's the single mental shift that separates the brokers who make it through year one and the ones who don't. Apprentices learn from mistakes, but performers hide them. Apprentices ask for help, performers pretend they don't need it. Apprentices measure progress in skills built, but performers, they measure it only in pounds earned. Apprentices plan for long-term arcs, performers panic when the short arc doesn't deliver. If you hold the kind of apprentice mindset for 12 months, year two looks completely different. You'll have cash, you'll have a pipeline, you'll have lender relationships, you'll have a back catalogue starting to form, you'll have confidence that comes from having done the job right rather than actually just being qualified for it. The performer mindset, though, that gets you to month 8 and then it just breaks down. The apprentice mindset gets you to the year 3 and it keeps you building. Pick one of them and pick it consciously. Do not drift into the wrong one by accident. So now you know what year one actually looks like. The week 1 disappointment, the lender criteria wall, the month 8 gap, the apprentice mindset that gets you through it. What this video doesn't show you is the timeline before year 1 even starts. Booking your first CMAP module, landing your first role, and the realistic number of weeks between deciding to do this and walking through the office door on day 1. And that next video is the one to watch right here on this channel. How long does it actually take to become a mortgage broker in the UK? It walks you through the honest end-to-end timeline from a standing start to consistent income.